welcome to the XM Live. Welcome to our session, Trade on the Go, Mobile on the Go, guys. So we are going to have a few, of course, hopefully, yes, few trades from our, beloved mobile phone, guys. Look, I trade extensively from my mobile. And every single day, guys, there are some setups that we can trade no matter where we are. Are we at home or going out? It doesn't matter, guys, because the thing is with XM mobile phone, with XM on your mobile phone, you can definitely trade wherever you're from. Now, what is a great thing here, guys? I'm actually using iPhone, and I have changed the setup in my room, guys. For everything is iPhone. Actually Mac. So I have Mac book instead of Windows. I'm using iOS everywhere, and I need to tell you that for our business, it's perfect. Maybe the situation in the past was not like this. Maybe it was different, I don't know, 10 years ago. But today, guys, it even works better than Windows. I need to admit. It's fantastic. It's working great. And if you want to have the full version on your desktop, you can download it directly from the XM website. So you don't go to App Store. All of you who is using, guys, Macs, you don't go to the App Store. You go to the XM website and you download the XM MT4, MT5 for your Mac. All right. This version here, guys, that I'm using on my mobile phone. Also, guys, it's you can find it in the App Store. You can connect it to your server, XM server, and you will see full functionality here. I have my Megatrend method, of course, for mobile. It's called Megatrend Hero for mobile. Here on my charts, guys, you can see here I have 8, 21, 89, and below I have the ATR indicator overlaid with Williams percent range. All right. So, hey guys, we trade. We trade. We don't just talk. We want to trade. A couple of days ago, during my 3 sessions. All right. And for all of you who still don't know me, guys, 2010, I got 3 awards on Forex Street website, 2 awards, and the best analyst in the UK 2016. So basically, trading is something that I enjoy, not just my job. I love this. I like this. And honestly, guys, I'm enjoying every single moment, guys, and with all of you. So if you have any questions, do not hesitate. We start from the euro, of course. We go from the euro dollar, guys. Actually, I'm going to scan all of these markets. And let's start with Australian dollar yen. So as we go through the different charts, we will be looking, guys, for trading opportunities. Of course, on board, I will refer to it as hero. You have a lot of different setups. We know, guys, if you come to my sessions, you know that we have bounce setups, 88 6 setups, 3 IOs, pandemic. Uh, Most of them are confluence setups, meaning that we use extensively order blocks, which are the bread and butter of my hero trading method, along such as moving averages and specific levels of price support resistance. So those trades are called confluence trades. For example, we have order block with 21 EMMA confluence. Sometimes, guys, when I see confluence, I use a little bit high risk when I enter a trade because accuracy has been unprecedented, and Definitely, guys, this method is the best. You can see my account here, double the account. So, uh, again, I'm doing this live also in front of the audience. So let's go here, guys. Australian dollar yen, the first one that we watch. But this is uptrend, clear uptrend. We have a sort of pin bar, but market is making double pin, rejecting from the eight. This is strong uptrend. And look, guys, this is level right here, Australian dollar yen. Look at these guys. I will put actually the line here, all right, because here, obviously, look at this, guys. This is buying opportunity here. This looks like buying opportunity. I might go into a long position Australian dollar yen. Just give me a few moments to pinpoint the exact entry. It should have been 85. I'm buying this right now. I mean, look, it's hard block, guys. This is order block. If the market goes down, I'm going to add one more position. Actually, this is long. So I will buy Australian dollar yen small entry. I will not go strong here because the market is high and this order block is pretty high. So I need to go. I need to be careful with picking up the lot size here. Look, definitely this is the order block. So all right, give me a moment. Uh, Here we go, guys. This is the order block. See this? And now let me tell you guys something. You can do this from your mobile. You see, you don't need to use desktop always. And when someone tells you it's not possible to trade with mobile, yeah, it's more than possible. Look at this. So if the market goes down, guys, no problem. We might add a one trade. So small entry, stop loss. I will put it at 96.50. So I will be risking small here. Doesn't matter. 0.15 lots. You always need to calculate your lot size based on your entry and the distance between the entry and the stop loss. That's how you know your lot size. You cannot always trade the same lot size. Now I know that my risk would be, I don't know, 45, 50 euros. So, this is for starters pretty good because most of the time we need volatility, guys, to have better trading opportunities. And I usually wait for volatility in order to make bigger, I would say, a little bit higher lot sizes. Usually I trade my account starting with 0.30, 0.40. As I build my account, I also add to the lot size. And that's basically pretty simple, right? So you cannot just use always the same lot size. It's nonsense. I mean, lot sizes are a must. To master the lot size, you need to master the price action, guys. And I usually trade with controlled martingale methodology, right? So you can see I double the account in a couple of months. Let's do this. I'm going to trade with small lot size, 0.15. My stop loss will be 96.48. All right. So 0.15 first entry, Australian dollar yen. Now, what is the target for this? Good day, Chong. The target for this is based on the ATR, guys. So I use unique approach to trade the market, the approach that no one else uses. It's called the ATR exit. All right, it's called the ATR exit. You can see on my system, my entry here is 96.85. With the spread, it's 88. You can see here everything on my mobile phone here. Here is the screen of my mobile. So I'm broadcasting my mobile screen, right? So my entry 96.88 with a spread, it's around 3 pips spread for the Australian dollar yen. Stop loss is 96.48. I'm using 0.15 lots, meaning that I'm risking a very small part of my equity, right? Okay, so Australian dollar yen, guys, I bought it, so let's see where it will go. Now, I was talking about ATR. So, guys, look, when you go to the daily time frame, because on mobile you cannot use custom indicators. On my desktop version, you know that I use custom ATR, which is telling me the digital number exactly for the range. Here on the classic ATR, you need to go to daily time frame, and you see here it says, look at the bottom left. It says 0.61, 0.601. It means we have 60 pips of ATR. So that's the volatility of Australian dollar yen, 60 pips. So if the market on the average makes 60 pips, which is 100% of the range, we cannot take 100% if we trade intraday. And I always trade intraday. I'm intraday trader. So what we can do is to take 10 to 20% based on current volatility. So if current volatility is like this, we take 10 maximum 20%. But I don't think we have volatility for 20%. So we guys need to make sure that we are realistic. We cannot take what we want. We take what market is willing to give us. So if market is willing to give us 40% of the ATR, we can take 24%, 24 pips of the ATR. So it's 24 pips actually in the Australian dollar yen. The more volatile the market is, the more or the higher our pip count will be. So we will take more pips, right? Because percentage is the same. 20% for London session, 40, let's say, to 30 to 50% for US session. But you see, the range is different. Australian dollar yen makes 60 pips per day, while GBPN makes 100, let's say, and 10. 50% from 110 is 50, right? From 60, it's 30. So that's how I calculate target. And that's one of the reasons why 90% of my entries are accurate. Because I know how to pick the target. Making, or let's say, placing targets, guys, unrealistic targets, is the way to lose your money, and potentially it can lead to a high drawdowns. Because many traders are concerned about the entry, the actual entry. But the actual entry is the least of the problems you will be facing. Of course, providing that you have a good trading system. Like Hero. Hero is the best price action trading system, guys. I have every proof that it's profitable. But for all of you who still don't know what that is, let me tell you that if you face difficulties in your trading, it will be mostly due to exits, right? I mean, entries can be okay if you know how to do it, right? But exits are much harder. And exits are, we would say, they are very subjective, all right? Which means that for me, the exit can be one thing. For you, the exit can be different level, right? But for intraday trading, I'm always referring to intraday. ATR exits don't have any competition. They're simply the best. Much better than any pivot point or whatever, guys. That's why I've been using last year and a half ATR exits. And I'm lecturing that, of course, on my XM Live solo sessions. Let's move on. So we open Australian dollar yen. Australian dollar.